Welcome to Charts Today. My name's David Linton, and today's edition for Monday, the 9th of January, comes to you from London. First charts of the new year, and wishing all our Updata clients a happy new year. And if you follow me on LinkedIn, YouTube, or Twitter, happy new year to you as well. So let's take a look at the markets. First of all, just looking at the energy mix. We'll come back and look at that later. I did do a post this morning on LinkedIn about momentum, and that's really gained some traction on LinkedIn, and it's just quite interesting to see that gas and power prices over the last 21 days have fallen by more than 50%, and that's a low reading on momentum, and we'll come back and we'll discuss what that means. But first of all, we'll take a look at what's happening in the major markets, and we see here quite a lot of green on the screen, so the markets are off to a good start for the first full week in 2023. We start by looking at the dollar. You'll remember that the dollar index last year, when we fell through this 110 level, we said the run in the dollar was over. Our call at the start of the year was that we'd see a strong dollar. When we fell through that 105 level, that was really quite critical, and we're back below that. So we're bearish on the medium and short-term charts. The long-term chart still is above the cloud, but we are seeing this pull away from the top. Remembering this is my weekly, my daily, and my 60-minute charts, my long-term, medium-term, and short-term view of the markets. I'm running here on Refinitiv Icon, but of course with Updata, there's dozens of different data services that you can run on, including Bloomberg, Trayport, DTN, Montel, lots of different services. You just plug it in and run Updata on top, which gives you all the trends and targets, and of course the speed of the able to move through the charts with these tracker charts. And we see here the yen is just looking weaker again, stronger against that weaker dollar as well. Sterling actually sitting at 121, so having broken that 120 level, really quite key there, and looking very, very strong today, breaking to highs for the week, and really starting to look quite strong indeed. Against the euro, not so strong, sitting at 114, a fairly flat performance, the euro and sterling tending to move in unison with each other. Bitcoin is back above $17,000, so that's a good start to the new year. Just demonstrates there are a lot of people not willing to sell their Bitcoin, but we do have these downside targets hanging over us. Of course, we've got some short-term upside targets there. You can take a look at those just simply on your point and fig charts on the 60-minute chart. We have got some upside targets there, but interestingly, this longer-term upside target to $22,000 isn't yet activated. We need a move above really into $18,000 to activate that. We saw quite a strong showing from the US market on Friday. The Nasdaq jumping there, and we see that on the 60-minute chart. Not enough to get us bullish above the cloud, short-term, medium-term, and long-term. So we are still quite bearish there. We've got these downside targets hanging over us, and another new one will develop on this column as well. Notice how that target has been met. So whilst we're seeing a little bit of an improvement, we're seeing the futures up this morning. The S&P future up 0.4%. The Nasdaq E-mini up 0.5%. Suggests that we're going to see more of a rise today, but we are in bear trends, and that just does need to be remembered. The FTSE future is actually making multi-month highs this morning, so that's really quite interesting, and we're starting to look very strong. Of course, the weighting of oil majors in the FTSE has had a big impact, and we've got some pretty big upside targets there. So the FTSE really outperforming there. It's on bullish on all three time frames. UK market looking a lot stronger, but of course that is driven heavily by the oil majors and their weighting in the FTSE. But the fact is, UK equities looking better than US equities. Looking at the DAX in Germany, we're up 0.2% there. Again, looking better above the cloud here than US markets. So that's quite interesting as well, and looking stronger there. A lot of relief for a warmer winter in Europe, and that's meaning that we're seeing energy prices much lower, of course. Looking at Japan, we were down there overnight, so that's quite key. And looking at the Hang Seng, up nearly 2%, so looking quite strong there. So that's quite key. And the Chinese market up 0.6%. all eyes on COVID, of course, and we are seeing the stats coming out of China now are not really reliable. Looking at the Sensex in India, we're seeing still strong growth here, bullish above the cloud on the long term and medium term with the upside targets. And if we look at the Aussie market, that was up 0.6% as well. We'll look at the energy mix in a moment, but looking at some of the commodity charts now, we've got pretty much across the board the weaker dollar helping commodities. Of course, there's an inverse relationship between the dollar and commodities, but we're still seeing that coffee is bearish on all three time frames. Sugar, also just seeing here that we're holding the long-term trend, but short-term we're seeing that fall away. And wheat prices, which really did spike last year on the Ukraine war, which was big, Russia, Ukraine being big providers of wheat, and we are just seeing that wheat is now just starting to enter into negative territory. And corn, also, we're seeing that holding the long-term trend, but short and medium-term coming under pressure. The real story is that precious metals are making big moves. We're seeing gold just really now starting to push for that $1,900 mark. We're back to bullish on the lagging line, and the price just kicking through on the cloud. So bullish on all three time frames. Silver, we're seeing here that also moving stronger, not quite above the cloud yet on the weekly, but looking stronger there on the daily with good upside targets there for silver. We've got a target there to 31. If we break $30 on silver, then we will really run much higher. Platinum also looking stronger there, just nudging the cloud, and palladium has work to do still just to get above the cloud, and we can see the medium-term trend not so good. So that's the odd man out. Looking at US 10-year yields, we're sitting at 3.6%. So we still do have these big upside targets. So inflation is not yet dead, although we've seen in recent months the pressure coming off yields. The big story in tech was that Apple fell below that 130 level. We've talked about that quite a bit on LinkedIn. Downside targets into the low 120s, and then below that nearly $100. So the darling or the bellwether of US stocks really starting to look a lot weaker there. And Amazon announcing their 18,000 job cuts last week. Not enough really. We saw an improvement there in line with the Nasdaq, but not enough to change the trends. We've still got some downside targets there to watch. Now looking at the energy mix, we mentioned this momentum chart. We can actually have a look at that. We see here how these are the various products. There's a 21-day momentum. We are at low points on the momentum, which probably means that we're not going to keep falling as much. Doesn't mean we've necessarily hit the bottom. It just means that we probably have seen the rate of change on the fall in energy prices coming to an end, because we're at that low point that we've seen him previously being tested. Brent crude still bearish on the cloud, below the cloud there, starting to look a little bit better on the 60-minute chart, just a shortage of short-term targets. The same was true of WTI, of course. US nat gas is up 4%, but boy oh boy has it been falling. We've got a target here of 411, not much indication here on the on the 1-minute charts, just waiting for a move back above $4 really. We talked about that in our energy report out to clients this morning. Coal is up 6%. Again, has been a heavy faller the last few weeks. I'm just seeing that fall away, rolling into the new contract shortly, of course, on coal. So that's going to be quite key. Emissions are up this morning, but really back in the 70s, and these downside targets hanging over us. Just watch for a new low there. Keep an eye on your 1-minute charts. That's going to be telling you what's happening. Now, gas prices were up this morning. We went out as neutral because we didn't think the market would hold those gains, and that's exactly what's happened. We're not holding those gains. We're pulling back. So we were reluctant to be bullish. We're below the cloud, both on the daily and the 60 minutes. So that's bearish, and we do have these mixed targets. And we're seeing MVP just up very slightly, but again, not holding the gains that we saw at the start of the open this morning. Last of all, looking at German power, boy oh boy, what falls we've seen here, continually lower. And whilst we're below 200, that's pretty scary for German power. We're just seeing those prices falling away. So no signs of a reversal yet. Keep an eye on those 1-minute targets. That's going to be really key. But for now, the real eyes will be on gas prices, and that's watch those 1-minute targets on your charts. That's it for today. Until tomorrow, happy charting. See you then.